Right. Hello everyone, my name is Roy, and today me and my friends in Group 56, Krystal, Yunji, and Daniel will go over some auditing concept in the inventory cycle. The inventory cycle begins when raw material is purchased, and then adding with direct labor and a manufacturing overhead, it becomes a part of work-in-progress inventory. As time passes and business carrying on, the work-in-progress become finished goods. And finally, when the sales is made, and an entry is also made to the cost of goods sold, therefore putting a conclusion on our inventory cycle. We can see that inventory cycle is quite interactive to other cycle as well. For example, in the beginning, the purchase of raw material is also a part of the acquisition and payment cycle. And then the application of direct labor and the manufacturing overhead is part of the HR and the payroll cycle. And finally, cost of goods sold is also an important part of the revenue cycle. Note that other businesses such as retailers may not have an inventory cycle this complicated. They don't typically have a raw material work in progress and a finished good inventory. However, they still interact with the AP cycle, the HR cycle, as well as the revenue cycle. Now we'll be discussing two what could go wrong in an inventory cycle. The first is evaluation and the second is in rights and obligation.
For valuation, one thing that could go wrong is that incorrect valuation method used to calculate inventory. This is important as understate inventory cost would lower cost of goods sold and ultimately overstate income. Adversely, it could be used to understate income to reduce tax liability by overstating inventory cost. So the auditor's objective would be verifying all valuation calculations are done correctly. The most significant control for valuation would be examining how they make an adjustment on inventory. This is one of the preventive control tests. The adjustment made for obsolete or damaged goods must be approved by a qualified employee who has a strong understanding of valuation calculations. System should not record adjusting entries until authorized personnel approves. This proper authorization would increase accuracy of adjustment value of inventory and prevent inappropriate adjustment. In order to test control, one could check that there are authorized signatures for each obsolete or damaged good adjustments, and also need to test if the system allows for unauthorized inventory adjustments. Moreover, the auditor should use their professional judgment to determine if the person has extensive knowledge to make educated judgment on pricing changes. For example, the auditors could check whether the one has a solid understanding of acceptable financial accounting framework. Now I pass this on to Krystal to talk more about substantive test.
In order to make sure the inventories are measured at the lower of cost and market value, which include net realizable value and replacement cost, the auditor can use statistical sampling to select the inventory item, or he or she can emphasize on items that have the greatest risk of RAM, such as items that have high product cost or items which price fluctuate the most. To test the accuracy of the product cost, the auditor should obtain and review the supporting purchase documents such as vendor invoice. If our client is a manufacturer, the auditor should also review the direct labor rates by comparing them to authorized wage rates and computation for applied manufacturing overhead rates to see whether the methods for calculating the rates are correct and whether the rates are reasonable. To test market value, the auditor should review the newest vendor invoice of the subsequent period for the testing of replacement value. The auditor can also do some research, seek help from experts, as well as employee professional judgment to test the net realizable value of inventory, along with documents that support the client's recent sales, such as payment made by customer. Substantive tests can also include perform analytical procedure to see if there are unusual changes in the unit cost or ending balance of the inventories. By comparing them with prior year data, management budgets, or industry average, etc. If they are, the auditor needs to increase sample and extend testing.
For variations, control and tests are mainly in cost of goods manufactured and finished goods section. Retail businesses focus mainly on finished goods part because they purchase their inventory directly, while manufacturing businesses need to worry about both. Direct material, direct labor, and manufacturing overhead has real impact on the product cost, and if applied incorrectly, could flip the P&L entirely, especially if they rely on a low-margin, high-volume business model. We also see a need for analytical procedures because there are more than one type of inventory account for manufacturers. Therefore, unusual discrepancies usually indicate accuracy issues. On the other hand, the finished goods in storage are important for both because potential adjustment and impairments, specifically inventories unsold for extended period of time, are subject to adjustments. The risk comes from the variety of goods in different industries. Its value usually depends on very different set of parameters, and without help from experts and professionals, it's very difficult to ensure its accuracy.
What could go wrong for the rights and obligations assertion is recording consigned inventory as inventory that the company owns. This what could go wrong ultimately overstates inventory, as the company would be recording an asset for something that they do not own. The overstated inventory in turn will lower cost of goods sold and ultimately overstate income. The audit objective for this is to ensure that the firm has the actual rights to the inventory that is recorded, so that consigned goods are not recorded as an asset. A preventative control that should be put in place for this what could go wrong would be having different labels, barcodes, and physical areas for the consigned goods. Different labels will allow employees to easily identify which goods are consigned or not. This minimizes errors for when goods are being moved around the warehouse and allows for easy identification for when conducting a physical count. For example, consigned goods could be marked with red labels, whereas inventory that the company owns could be marked in green labels. In addition, barcodes are also very helpful as it allows the accounting system to recognize that the inventory is consigned once it is scanned. This adds another layer of transparency for when employees need to identify consigned goods and will help the company keep track of what type of inventory is removed from shelves, as they should be scanned first before it is removed from the shelf. Lastly, segregated areas for consigned goods further allows employees to easily identify what is consigned and avoids confusion when conducting a physical count of inventory. In order to test if some of the controls mentioned before are effective and working, an auditor would have to observe the inventory areas to determine whether or not there are indeed designated areas to store consigned goods. By visiting the warehouse, auditors will easily be able to verify this. While at the warehouse, the auditor can check if consigned goods have the correct labels attached, which makes them easily identifiable compared to regular inventory. Lastly, they can go in and check if barcodes are attached to every inventory item, and select a sample of barcodes to scan in order to verify that the accounting system indeed recognizes consigned inventory versus regular inventory. The company should be conducting periodic reconciliations for consigned goods to ensure that their numbers match the suppliers. For substantive testing, auditors can select a sample of periods to reperform the reconciliations in order to ensure that it is done correctly and that every transaction on the reconciliation has valid documentation. In addition to performing the reconciliations again, auditors can select a sample of consigned transactions from different periods to ensure that there's proper documentation for these transactions and that they are included in all of the reconciliations.
For the assertion of rights and obligations, most of the controls and tests are in finished goods and shipping part of the inventory flow. The reason is simple, since our what could go wrong is related to consignment, which by definition is goods owned by someone else. As the consignee, it should not be counted in our inventory. This consignment comes as finished, sellable goods and therefore has nothing to do with any part of the manufacturing process. And since they belong to someone else, we do not need to worry about purchase price or adjustments. Our task is rather simple: sell it and keep a record of the sale. Therefore, the majority of the control and tests should be focused on preventing the mix-up, not on other parts mentioned above that are not part of our responsibility. Thank you very much for your time, and we hope you enjoy the rest of your day.